Welcome to Markets Now. I'm Michelle Ruck along with Garrett Toay with AgTraderTalk. Some mixed trade in the livestock futures today. Grains lower and row crops mixed in the wheat. And Garrett, the corn and soybeans setting back. How much of that was just profit taking after kind of running up into resistance? Or are the markets feeling a little tired?
No, it was a typical trade in my opinion. These corn, you look at the chart, we had a breakout yesterday above the trend line from the September highs of last year. We didn't quite trade to the 200-day moving average, which is at 573 3/4 in December corn. And then today was a lower day and kind of started out on the Tuesday night trade or coming into Tuesday morning. We started out a little bit firmer, but it was a mixed session, I should say. But we went back and tested that old breakout. We bounced. We held that support. So that's a good sign. It was just an inside day for December corn day. But I think the key thing is the market's going to get fairly serious about things if we can make a run at this 573 3/4, the 200-day moving average. And then I also have a long-term trend line up here at 580 from back in 2021. That's will be an area of interest. So if we take those two levels out, then maybe we can see $6 again. Make a run towards those 6 1/4 levels, but we have to remember that the fund's going to want to get long in here after covering these shorts they have.
Yeah, no doubt. That is a big question mark on whether we can keep going here. You said the corn market is more concerned about the war situation and the global tight supplies, but is it going to translate into business either for corn or wheat at some point?
I think it probably means more for corn than wheat, because obviously you look at who Ukraine's customers were. I think what Putin is trying to do is position themselves so they can replace Ukraine. This is another strategic, rhetorical move in the war, if you will. But they're trying to replace Ukraine. But China was a major purchaser of Ukraine corn. They've already found Brazil. I think that this will translate eventually. I mean, if we're going to take 10 to 15 million metric ton of grain off the market, or the slowest process, it has to translate to somewhere. Now, we will have more production out of Argentina next year, assuming they don't have a drought again. But eventually this has to translate. The world S&Ds are getting tighter. Especially since Putin has kind of changed his focus as far as since when have grain export facilities been part of a strategic focus in a war? Well, it does when Ukraine's main source of income is their grain exports.
Yeah, and this situation so far has not really translated into any wheat business for the U.S. And so with that much said, how much higher do you think prices need to go in the wheat market to put premium in? How much more war premium do we need?
That's a good question. Except we got through the 200-day moving average. It looks like Russia's going to have a record crop. I think Australia still has wheat to sell. And we'll have a Argentine crop available here in October, November, December. The U.S. is still going to struggle, I think, for exports. I mean, we're still not we're competitive, perhaps against the Baltic and the European countries, but we're still way out of the money as far as Russian wheat is concerned. I don't think that it's going to translate much for wheat, to be honest with you, just because I think at least this first year, Russia is going to be able to compensate a lot of that.
What about this soybean market here? Are we still trading weather? How much weather premium do we need to put in, or have we put in enough? I mean, we've had about a $3 rally off of the lows, Garrett.
Yeah, we've had a $3 rally, so I mean, it doesn't really necessarily surprise that we have a pause that refreshes here in the soybean market. But it's July 25th, and now is go time for soybeans. So weather especially is important. We're back here at contract highs. I think the market is set up for a potential breakout to the upside if weather is dire, but we do have weather premium in this market. So if it starts to rain, it's going to be a Katie bar the door type moment, I think. Mm-hmm. But the fact that we have such tight acres off these June acreage numbers, there's just too much risk in the soybean market out here. And we've had flash sales this week to China, which we need to continue. I mean, we're still about 10 million metric ton behind last year's pace, but from a cash basis, we are the market right now. We should see these exports continue, and that should help if it does continue. Hopefully, this should mean some better basis this fall.
No doubt. So if we get above that contract high, that 1448 and a quarter, we're in rarefied air. We don't have anything from a chart point to really stop us then, do we? Or where do we project to?
Not really on a daily chart. 1469 would be the 23% retracement on a weekly chart of the move from 1097 up to 1584 and 3/4. So 1469 to 1475 is a Fibonacci retracement and a trend line resistance on the weekly chart for me. So at this point, 50 cents upside if we can get above 14.25. But in the last 2 days, I think it's fairly obvious just looking at these tails, these selling tails, that we've seen some farmers selling at 14.25 beans.
Yeah, well, we should be rewarding the market here, I would think, at this point. So let's talk about the cattle market. I think this is the 4th down day in a row. So the market is technically consolidating, but is this just kind of a healthy correction, you think?
We talked about it earlier. I mean, it feels a lot like a buy the rumor, sell the facts sort of thing with the cattle on feed and the biennial report. Those reports really didn't tell us anything that we didn't know the last 6 months. I think that the lower board, I think you're just seeing some mild profit taking, and I emphasize mild. We're off slightly at the highs. I wouldn't be surprised to see if cash is firmer again this week. Is this kind of normal market structure? We're a couple dollars off the highs, and it's I don't want to sound complacent, but I don't think it's that big of a deal.
Yeah, and it seems like the funds buy on just about every break here. So, hopefully they'll defend their long position. What about this hog market too? Cash and especially the cutout values have continued to push this market, but that August contract, we're right up into resistance. Can we take it out?
That's the question. I mean, as I mentioned when we were speaking before the air, I think the easy trade is over. We're going to get more into a grinding market above 102.50 as we get into the resistance. However, that being said, we've got a pretty decent area of consolidation support between 95 and 97.50 here in the August contract. So, it may turn into a little bit of a choppy market bounce, a ping pong market between this 97.5 to 102.50 near term until the market decides with cash. Now, with cash being firmer, middle of the summer grilling season, these higher pork prices have not been realized at the retailer at the grocery store yet. They're still running a lot of specials on loins and other products. I still think that demand is building here.
Well, it has been a good run, that's for sure. All right, thanks for joining us. Garrett Toay with AgTraderTalk, and that is Markets Now.